Welcome, ladies and gentlemen. My name is Brad Matheny. Today's the 4th of February. Happy Sunday, everyone. Got some really exciting news here. I'm going to go over some detail here with regard to the excess phase peak pattern. I've got a couple of other symbols in here as well. This is the SPY on the top chart. This is gold on the bottom chart or middle chart. This is crude oil in the black, and this is the 10-year treasury in the blue on the bottom. Now, what we're talking about here is an excess phase peak pattern that is setting up in a number of forms. So I'm going to show you here how the excess phase peak pattern sets up. Remember, it must establish a new all-time high. That means it's got to come up, roll down, set up the flagging formation, and this is the first stage of the excess phase peak pattern, which is to come to a new high, roll downward, set up this flagging formation. Now at this point, one of two things can happen. Either it can roll out of this, establishing a new high, or it's going to attempt to break below this support level, which it did, come down and establish a new support level, and then waffle around a bit. This is called the breakdown phase. This is the waffle around, establish the ultimate low, base and bottom, and normally this is the end of the pattern. So you really have, again, the A phase here, which is establish new high, and again, this has to be done. It cannot be just some intermittent high, okay? It has to be done as a new high. So all along here qualifies as new highs. These do not qualify as new highs, okay? And I'll explain that to you. Second, we get the pullback and the flagging. So secondarily, we come over here. B is pullback and flag. So pullback and flag sets up right over here. A sets up here. B sets up right here. C is the breakdown of resistance right here. So it's really support, not resistance. C is the breakdown of support right here. That's this area right here. In fact, let me drag this over and spread it out a little. Then D becomes the, once we get the breakdown of support, D becomes the establish temporary support from the breakdown, which is right here. And then normally we waffle around, and then lastly we get the breakdown to the ultimate low, E. So now, as you're looking at this, I want you to understand that the opposite is also true. Okay, if I were to invert this and you were to see a new downtrend that rallies up to a new flagging formation right here, up down to a flagging formation, then we would have the flag pullback. Then if it would set up resistance here, break above that, that would then set us up to establishing temporary resistance right here, waffling around this resistance and break out to an ultimate high. Okay, that's what that would do as well. So now let's come back over here, re-invert, set these things back up, Oops. So we have this, 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 and ultimate low. Now, we take a look here. We can also count a move here, folks, okay? So we pull all the way back down to here. We come back up to here. We set our flag formation here. Now remember, I'm trying to show you this as a new technique. Okay, this is something you need to be aware of, which is a new technique. I've been using these for about 8 years. They are very common. So we have the breakdown to a new low. We have that's our A. Same as establishing a new high, establish a new low. Come back up, flag. We get the pullback and flag right here. We then get the breakdown of the flag, establishing new resistance here, and waffling around. This is our new resistance level right here. This is our flag resistance level right here. At this point, now we see the breakdown of this move here, which is the E move, which is breaking down to establish a new low. In this case, it's E, breakout to new ultimate high. That's where we're at right now. So now, understand, this is the bearish breakdown, the same pattern, setting up exactly the same way. We've got A, B, C, D, E. We've got A, B, C, D, E, breaking right now to an ultimate new high. So this is going to be, in my opinion, a good solid rally to the upside, rallying up to a new high. So I'll change this to green. And secondarily, now I want you to understand that we have had two major pullbacks. So I've explained to you the little pullback here. Now let's have some fun and do the big pullback. Big rally, big pullback. This is the long-term picture, folks. Big flagging formation coming across here and coming across here. Okay, the pullback high, which would be right here, the ultimate high that we came into, and the pullback high, let me duplicate this, would set up our zone. So this becomes our zone for the range of price. And this becomes the large scale, long-term flagging formation. Here's our A pattern, comes all the way down to our low. Here's our flagging, which is our B pattern. We would expect the flag to stay below the high back over here and attempt to potentially break downward, which it didn't do. Okay, it rallied. It rallied up above our previous high, which invalidates this trigger. We now have confirmation on a broad scale basis that we have a secondary rally schedule taking place here off of these purple. Purple now confirms that we are going to rally. Secondarily, folks, I want you to pay attention. These are all over the place. They happen all the time. So we have the big broad scale setup here setting up an ultimate low. We have the purple long scale basis setting up a failure of B, this big long failure of B, setting up a big rally. We have the inverted basis confirming an E breakout to a new ultimate high. And lastly, folks, we have the rally up to this area, which sets a new high, comes back down, flags out right in this area. And where we're at with this, folks, make this kind of a light blue color. This blue color, this is a standout high. How can we tell it's a standout high? It's a high that hasn't been reached in more than 15 to 25 plus bars. Now remember, I'm on a weekly chart. So I'm looking for highs that have set up, you know, cleanly. I don't want a little something here that's 11 or 12 months. I want something here that cleanly goes from July all the way back over here to April. This is a good standout high. This does not. This is February. We go all the way back here to August. That's approximately 6 months. Yeah, I mean, maybe I could have called this as a system, and that would have set up a secondary, another little trend right here. Moving up, coming down, flagging, breaking out to the upside. That would have been another potential breakout. That would have confirmed right here that we were going to extend higher. But what's most important here, folks, is this one. This light blue one, this broad purple one, the longer term setups, the red one. I need you to be very cleanly aware that we have a very broad triple confirmation of a rally to new highs. We have, again, let me try to do them for you. We have the blue. We have the purple. We have the purple, blue, that's the red, which actually moves up to here. You have a triple confirmation with the excess phase peak pattern or speculative phase peak pattern that we are now moving into a bullish high, a bullish rally to a new ultimate high. This is extremely important to understand that even though Fangs and the Magnificent Seven are driving the move, I want you to be very aware that this changes the dynamic of the market. We are now seeking out an ultimate high. And what I believe will likely happen is we will move into a comparison move. So hypothetically, I'm going to do a couple of levels here. I'm going to come from here up to here, come back down to here. Then I'm going to see if I can clone and drag this back down to here. And I'm going to explain that if this is so here we have two modes of expansion. We have either A, B, C generating wave 1, B correction, or 2, C up to the upside, which could either be a 1, 2, 3, 4, 5 move up, or it could be an A, B, C, 1, 2, 3 move higher. So if it's already an A, B, C, 1, 2, 3, indicating that this was the end of wave 1 and this is a wave 2, okay, then we are looking at a base here, which is going to put us up into the 591 to 508 area, okay? Sorry, 568 area. So be aware that this is going to be a big move. This is going to be a very big move if my analysis is correct. If this is a wave 1 move up to here, this is wave 2, this is wave 3, we are looking at a move up to 591 to 568 in the SPY. Very big move, folks. If we are looking at this as the base for our pattern, then we are looking at, do the math here, 494, which we're already at, to 232 roughly. Okay, so again, this gives us a range where we could be looking at right here, roughly this area, to this area. Possibly higher. So I know it seems a little sketchy. Find that other area, 550, 568 to right here. So you have targets here of roughly 532 to 494. And you have broader targets up here of 591 to 568. Okay, now that would confirm either of these levels pretty much right over in this area. Or this area. Will likely confirm the top in the SPY. And again, that gives us a range. We're at 494 already. So we have the ability to go up to 532, which is about a 6 or 7% increase at this area. But we also have the ability to go to 591 or 568 in that area or higher to expand up out of this. So be prepared that the downside move, the end of this move, okay, is not likely going to come over the next 2 or 3 weeks. It's more than likely going to come in the April, May, June area, peaking out up in this area, ending our wave. At this point would be a wave 5 or a wave 3 move, indicating that we get a wave 4 back to the downside. And this now changes the structure of the markets. If this market continues to rally through this year and does not pull back, then we're going to have a pretty solid opportunity for traders to really take advantage of some of the triggers that are coming. So this is really big news, very big news. Now pay attention to the TTScanner and the hot list. We're getting good triggers, okay? Caterpillar, AXP, MRK, indicating transportation and heavy equipment. We're getting lots of good triggers setting up. Take a look here. We got a new trigger in DWAC. We got a new trigger in FA, a new trigger in GGG. Lots of bullish triggers setting up. The markets are moving into a broader scale upward trend. Still not a full scale, full dynamic upward trend, but this new move is going to persist. Probably until very late April or May, in my opinion. And that means we're going to have essentially February, March, April to catch this rally. Okay, look here in the hot list. We've got Citigroup. All of these are already long hitting targets. We've got Ally Bank hitting targets. A new trigger, sorry. Lots of bullish, lots of accumulation. We're also looking over here at the scanner, the TTScanner Hotlists. We've got consumer discretionary as a new trigger. Lots of bullish triggers, lots of targets hit. We're going to see this continue to expand to the upside. Okay, here's the inverse list. All of these shorts are basically bullish triggers because they're inverse lists. The S&P high beta 3x shares, new trigger. You're going to see a pretty solid reflation until something breaks. So my opinion is that's going to be somewhere between April, May, June. We might start to see some real crisis events moving into the summer months, but I believe we're going to see a good solid 60, 90 days of solid rally, which you need to be aware of. Core inverse list, new trigger in water resources, couple of existing triggers here that are working very well. And then lastly, we have the value list. And here under the value list, you can see this is weekly. We have Home Depot, Travelers, T-Mobile, Amgen. We've got Salesforce, IBM, Microsoft, Walt Disney, JP Morgan Chase. Make sure I got that. Yep. Phillips 66 and ONEC Corporation, ONEC Inc. All solidly bullish. Now remember, this is not a broad scale rally. It is uniquely driven by the fact that foreign markets are weaker. We're moving into an election. The U.S. dollar is holding up. This type of a rally, especially in technology and the, let's call it the large caps for the most part, should continue to do well for traders. You can be confident that the market is biased to the upside, wants to continue to move to the upside. This is not the time to try to pick tops and short the market. This is an honest to God breakout, multiple confirmed breakout trigger that looks like it's going to continue for at least 60 plus more days to the upside with a bias, maybe even longer. Okay, guys, so big news. Talk to you soon.